Hello everyone, welcome back to another exciting video. I know it's been a very long time since my last upload. It's been almost 3 months since October. I haven't recorded any video. Today is the 25th December 2023 and there's a lot I want to share. Of course, it's on holiday and the markets are not moving yet. So I want to use this time to share our daily checklist, what we look for every day and how we formulate our daily bias. Alright, so on the daily checklist, firstly, before we look at the daily checklist, I'm going to do a top-down analysis. As usual, I like to start from the 4 hour time frame. It's a lot more better for me. Let me see. Clean. Just quickly get rid of this. I want to know exactly what the 4 hours is doing, and from this perspective, the 4 hours shifted from the bearish leg back to the bullish head. So see, this is a high, a low, and I can already sense a high. So in a nutshell, the H4 is bullish, and now that's something we need to work with. So let's go to the hourly time frame. So the hourly time frame is a very important. It's a key time frame because it is the main time frame we use. It gives us the actual trend, the daily range, and the rest of them. The list goes on. Yeah. So this is the hourly chart, and the most recent trend that I can see is from this high to this low. That is the daily range. So first, as I like to say, before we take any trade, the daily checklist firstly is stop rate. So how do you look at stop rate? Of course, the more clear on the M15. How would a stop rate look like? So, and that's why you see I now use the Asian range because it's a very it has a low liquidity here because of the low volume during the Asian session. It's liquidity for the composite operator. So the highs, the Asian high and low already is a liquidity. Stops are there, and it's also a stop rate. But not only Asian highs and low is liquidity. Sometimes that liquidity get taken even within the Asian range. I don't know if I can show you guys a clear example. Let's just go back and price and see. Look, for instance, look at this example. This is a high, and then price just smashed through it within the Asian session. So this is a very clean stop rate. So if I have a very clean stop rate like this, I don't need to see the high or the low of the Asian range get taken out. This case, similar thing. This is a swing high, and the swing high get taken. It is a stop rate, so I don't need to wait for the high or low of the Asian session get taken out. So that's how it is. At times, clean, also a very clean one here. A stop rate, I don't need to see the high or low of the Asian range get taken out, and that's how I do it. And there are scenarios where definitely have to wait for the Asian rate. Okay, this is another stop rate. No need. And this is not a stop rate. It's a little bit choppy, so I have to wait for the high or low of the Asian session get taken out. In this case, it's kind of similar because it's a very choppy price action, so I have to wait for the high or low of the Asian session get taken out. So I think that's stop rates explained. Of course, we have a low of liquidity, different type of liquidity. But that will be a whole topic for another day, liquidity. So after stop rate, you look at market structure shift. Let me give you an example. Let's say within the Asian session, we had a very beautiful stop rate like this. There's the stops and just weak out like that. And what should I wait for next? A market structure shift. And after a market structure shift, and make sure price come back to a premium or discounted level. In this case, a discount level, price come back to discount level. And how do you measure a premium discounted level? How do you measure a premium or discount level? You use this tool. Either use the Fibonacci, but personally I'm using the GAN tool. So from the high to the low of the range, and exactly as a 50%. Make sure price crosses 50%, or I look for point of interest within the 50%, and as vice versa. If it is on the flip side the same thing, I look for price to cross above the 50%, then you know, or I look for point of interest within or above the 50%. That's what I'm not sure. That's what I'm trying to explain. That's just it. So this is my daily checklist: stop rate, market structure shift, make sure price is within the discounted or premium level, and look for point of interest within that zone. So I'm gonna just delete everything and let's work with that as we see. So let me open Euro. Okay, on Euro USD. I'm gonna do a top-down analysis and review all our trades last week. I just hope TradingView give us a chance to do so. So as I like to say, I zoom out very well, especially on the high time frame. So price is moving on this leg high, sorry, a higher low, a higher high, higher low, higher high, and we had a change in market sentiment. Price pullback. It's a very clean M15 supply zone, and I will cut this drop, then a continuation, instantly making me feel sorry about that, instantly making me feel that this high here is a weak swing and it will get taken out eventually. So we're currently trading within this range, this being the high, this being the low, and then this is not the high. So let me just make this red. It's a very clean one. So this is not in BOS. In case you don't spot it, I'm gonna just draw this right here. Bullish BOS, and then here is a bearish BOS. All right. So I think this is all I can do in this time frame. Just understand the overall trend. Of course, if you have a very clean point of interest, like something like this, you can have it in mind, and then refine it to the M15 or the H1. It is what it is. So after this break of structure here, we go something like a change of character, but it didn't hold, and an actual change of character for price to pull back. So let's just go to the H4, the H1 time frame, the hourly time frame, and this is Friday, Thursday, Tuesday, Monday, Tuesday, and then Monday. So this was where everything started from. This was where everything started from. So of course, we pull back into a very clean, unmitigated M15 zone right around this area. It's not that important now, but yeah, around that time. So it's a very clean swing trading opportunity for everyone. So of course now we have everything in place, and my daily range from this high here to this low, because that's only what I can see daily range. So this is my daily range. This is the high and this is the low. So what I'm trying to say is the daily range is bullish. So it's essential and crucial if I look for only buying opportunities. I know price has already, the objective is complete. Price has pulled back to high interest area, a very clean M15 uh, supply level, extreme for that matter. We might be expecting a drop. All right, but the H1 hasn't yet given us that chance because the H1 stands firm and is bullish. So there's no reason to start looking, to start going against the trend whatsoever. I'm a very religious trend trader. You must know that by now. So alright, that was my daily range. Price came into. Let me just go to the M15 so you understand. You start to see a lot. So on a Friday, I don't like to take swing trades. If not, it was also a very clean opportunity for right here. This was the extreme IFC. Could just set limit order there and target this high for how long it's gonna take. But of course, it's Friday already and it's around 8:15. It's not really what I'll do. Yeah, because market session will close. Don't like rollover, especially holding trades within the weekend. It's not just something I feel very comfortable doing. So now let's go. Let's see this. So this is a daily range from this low. This is a higher low, and up there's a higher high. Price came into a discounted level since on Friday, and Monday came in. We got this very clean stop rate, change in state of delivery. So what else? What should we look for? Remember, the H1 is bullish, which means the M15 has to go with the H1 bias, or the H1 trend, H1 direction, whatever. So I had this massive push. Of course, I'm expecting price to pull back to a very discounted level. But before then, what we did was we looked for a, because if price is gonna displace upward, it will not wait for anyone. It's not gonna pull back and mitigate all of those demand zones. It doesn't work like that. You need to be smart and act fast, man. So this is a push that went up, clearing the Asian high. So we got the extreme zone here, or the decision point that where the initiation came from to clear the high. So in this scenario, I will not just set the limit order and hope for the best. It doesn't work like that, because I'm not comfortable with this trade. There's no high confidence to enter this trade on the M15. This is not too, it's not a very clean demand zone like that compared to this one. This is extreme and unmitigated. It has this displacement, a very huge fair value gap. You know, this doesn't have much. I'm not really comfortable and confident in this zone as I will be in this zone. So then what I will do in such scenarios is wait for the M50, wait for the M1 confirm, or let me say fractal confirmation. And that's how I'm gonna formulate that's how I'm gonna take a trade. So I don't know if we can, let's try the M1 and see if price allows us to go this far. I'm not subscribed to TradingView, but don't worry, something I'll be working on. I'll make sure I do that next year. To be honest, I don't really need it, but you know, as I'm teaching, I need it. I need my students to understand exactly what I'm doing all of the time. So this was the first trade. Of course, I was just looking at it. But what happened? This is more of like the box setup. We had a aggressive move up and aggressive move back into the range. So this is now on the low I was taking. It shows change of state of delivery. Then price went back into the range, and of course I do not use fair value gaps for entry. That's a very clean supply demand zone for me. I can just set my limit order there and what and target this high. As simple as that. But I didn't take this trade, but that was a very clean opportunity there. So my trade was everything is just weird now. Right now I'm asking myself if I really got a trade. I think we took a, yes, we took a sell trade. We took a sell because we saw this clean change of character and expecting price to pull back and filling all of this feeling all of this imbalance and come to extreme demand. That's what I was expecting, and that was the whole idea. So this is now a very clean zone imbalance, and then M1 does most of the work. So here, as you can see, so this type of zone. Let me go back to the M15. For this type of zone, I'm a little bit I'm not too skeptical, and I'm kind of like very confident take trade like this. Of course, it's very risky because we're trading against the trend. We're kind of counter trend trading, but it is what it is. So just set my limit order like so. 8 pips on target here. Where price is pulling back from 8 pips. So there's no way I'm gonna take a negative risk reward. So I'll refine to at least 5 pips. So I'll use the free blocks. Stick to this high here. This was my target. That means I targeted this low, this zone here. Yeah, I think it's fair. Yeah, it's fair enough. It's okay this way. So let's go to the M15 to see if the M1 to see if there was any M1 opportunity. So this is the M15 clean zone, and you see there's an extreme IFC there. This candle here, you can just say it's refined there, but that's not, because that's not the way I showed. So now, how can we be involved in such opportunity? Massive push, change in state of delivery, a very clean BOS, pullback, another very clean rally, a little bit of pullback, creating this high, then price finally gained enough momentum to start dropping. So this was just a week, so which means this zone here is not a valid one for me, or I cannot trade based on such weak signals. So this, after this huge or massive displacement in price, then I'm going to use this very clean unmitigated demand zone supply level like so, and just basically set my limit order. And of course I won't target for this was within the London session, so I do not do anything crazy. I don't have unrealistic target during the London session. So refine onto the external, and you must notice that I do not over refine. Have the same target such as my first guy, the zone. Even if I use a free block, it is not rocket science. So yes, it was 10 hours. That's basically it. Set and forget. 3 hours you break even, 5 hours you take partials, and let's the rest run, bro. That is just, that's essentially how I trade. So you can see how from the daily bars, we had the stop rate first, right? And that stop rate was kind of together with the market structure shift, had clean demand zone, didn't really trade off demand, price moved, and we start to see, because the M15 we had this huge rally, we're expecting a pullback to, you know, kind of correct, feeling some imbalance before the move up. Of course, when it comes to pullback, you don't know where it will end. That's what you should put in mind. You have to be very careful when it comes to stuff like that. Exactly. So let's go back to the M15. This was the Monday trade. I think that's only what we did on Monday. God, and the rest was just stories. So coming to Tuesday, we're starting to see movement upwards in price pullback, and the continuation. Okay, understood. Same thing on Tuesday. First thing on the list is a stop rate, and since even within the Asian session, got this very beautiful stop rate. Of course, we're expecting bullish momentum. Of course, so this is a very clean zone, extreme IFC. We've got fair value gap also. So now, and it's not just an IFC, there's an FU candle also taking out this low, then blasting out. So this is a very clean demand zone here that I can use there. Of course, a zone like this, I'm not gonna just set my limit order outright. I have to use fractal confirmation to execute this. And this is another demand that I was looking to enter, but this wasn't possible also because I have to look for M1 cover. This is valid to enter M15, but of course I refined and I wasn't filled in. So the M1 actually does the job. And lastly, a very clean demand also, like this. So for this, I set limit, and I actually refined on the M15, and I got tapped in. I don't really think there was an M1 confirm here. At times, let me just do this. Refine here, stop loss here, 2 pip, clean target. Alright, so let's go back to the rest of the zones and let's see what the M1 is talking about. Most people you tell you don't trade during December, but in my case, it's not like that. Well, if there's a setup, there's a setup. If there's an opportunity, there's an opportunity. The only time I will not trade is one, if the markets are not moving and there's no opportunity from like that my edge defines, or you know, standard English, man. So this was a okay, nice. Uh, Due to volume, the kind of volume here is just somehow. I wasn't really looking here because I want to see price taking this Asian low high because it was very close to it. Can't just do it. So that's the reason why I wasn't considering a zone, of course. And I used to set I send all of the zones to the group chat, and for, for a person that's okay with setting limit order at the open of the zone and then stop loss at the low and target anywhere, it's okay. You can do what you want. So I think okay, this was it. This was it, man. Yep, this was it. So as price push, leaving out this huge zone with imbalance whatsoever, changing state of delivery, price keep dropping, push up, breaking the structure, and I expect pullback. The reason why I did not set limit order after this break is because this was the extreme, and where it was it, and this was the decision point. So the extreme and decision points, they are not in harmony, which means it's not one. I don't want to have two zones in a leg. You get? I don't want to be indecisive and say, should I pick this decision point or should I pick the extreme? I want a I want them to be in harmony. So if that's the case, I'll wait for price to pull back at least 50%, which means within the discounted or premium level. Then if it gives me a change of character, I execute on that. So that's how I call this beautiful trade. Set my limit order like that. Find, yep, like so, 1.2, and what was my target? And I actually sent this in the group chat. Yeah, I couldn't over refine. So of course, if you've been following me for very, or you've watched, if you've been following me for some time now, or you've watched some of my videos, if I have something like this that I don't want to over refine, it's kind of okay for me. I would just just kind of like take it to 10 hours. But 10 hours, 8 hours doesn't really have much difference. You could as well take TP there. It doesn't matter at all, man. It does not matter. So this was it. This was a very clean trade, and then this also. So two trades for the week. I think it's nice. Fair enough. There's no much noise, bro. No much noise. So this was the M15 zone, and there was an M1 trade here that came back to break even. So we had this rush into the zone, a rally, aggressive move up and aggressive move down. So it's more like the bus setup. I have a very clean zone here, but however, price did not respect it. Came back into the discounted level and started giving it, shifting and structure. So this is where I'm gonna, kind of like set my limit order and then allow the rest to run. So of course, with an M1 setup, 2 pips max, and from M15 setup, 5 fixed max. So I'm gonna just take this lower. Remember, this is my target. I need to have at least 10 hours. Sometimes I don't over refine. So I actually got filled out, a bit filled, yeah. Actually got filled in, and then it came back to break even. And someone can easily take a loss here. Doesn't matter. Just delete this, and this is the rest of it. That is just it. And this was Tuesday. It's also a very beautiful day. Let's go back to Wednesday. And the reason why you didn't see me put any daily range again, it's because we're still trading from this high to this low. So that's still starting firm and remain our daily range. Unless we break through or we break. Yes, unless we break through. Either towards the upside or down. And here comes Wednesday, still waiting for stop rate. A low within the Asian session got taken out. So, and then this was where I took a very, you know, where's the X? This is it. The decision point, I guess. Oh, okay. I actually used this. Now I remember. Okay, this zone right here was kind of mitigated. That was efficient price action. So I set my limit order here because from our edge, the way we define it is that this is extreme, unmitigated RFC, and nothing beats it more. So we took a quick L here, -1, and there was no entry on the M1 whatsoever. I think another zone here. It's a very big zone. The M15 didn't really work, but we'll go back to the M1. This is all Wednesday price action, and it didn't really make a lot of noise that way. There's no much noise. So let's go to the M1 and see if our names were called. As you can see, I said there was no M1 entry on this actual zone. It was just a very quick -1 there. It's gonna help. And then this is the zone. So firstly, we had this massive push back into the range, change the state of delivery, pull back, massive push, pull back, push, pull back, and then what creating this high, creating this equal lows. And for a setup like this, it's kind of an entry for me because liquidity is magnet supply. So a very clean scenario like this, I look for the extreme IFC, and there was no indecision point contradicting my buyers whatsoever. So that's my zone there. I think it's a 1 pip, force 1 pipette. What should I target? Should target this low, easy peasy, 10 hours bang. So that's how it's done, bro. That's how it's done. A -1, then a 10 hour. I think that was it for Wednesday. Thursday was a very dry one. So here comes Thursday. We got a very clean sweep. Remember, price is bullish. Do not forget that. But start getting this read. It's high, sorry, low, high, lower, low, lower, high. So it's kind of like confusing. And the price breaking above and coming back down, breaking below. So when I came on Thursday, I was literally confused. But of course, the overall trend is bullish because this is this is the inception of the inception of the pullback. Price went up, pull back, push. I think this was the main push from this low to this high. Yeah, that was the main push. So this was an internal pullback. So of course, trying to sell is counter trend, and it's a little bit risky, but it is what it is. Trading is risky, and let me just delete this first. So this was a very clean zone. I like this one because it's an FU candle, took out liquidity, then shift to market structure. That's a very clean zone for me. So there was no zone back up, there was no buy trade on Thursday, and there was nothing to do on Fridays as well. It was just so dry. It was dry price action all through. So Thursday was just a sell. M15 since I was using this liquidity graph, the Asian low as a reason to enter. The Asian has a reason to enter. I also targeted the Asian low. Refine. I entered exactly at the open of the box top there. So it's a box setup. Had aggressive move up, then this one aggressive move down. So that's it. Clean 6 hours. So let's go to the M1 to see if there's any opportunity on the M1. So when you have a predefined system that's mechanical, you're not gonna get caught out in the market. You are gonna be a winner always, my friend. So I just deleted that. So what do we have here? So price is pulling back. We got this beautiful break, change in state of delivery, pull back, move, pull back, a push, pull back, a push, and a pull back. Then we finally got this push here, and then this is where the break is gonna happen. But some people wanna play weeks and take trades here. As you can see, it works out, but that's not gonna always be the case. Okay? So there was no M1 entry, but that was it for this week. So I hope you've learned a lot from this video, and I will try as much as possible to see if I can keep coming up with this recording, so you guys can learn a lot from it, learn a lot from my day in a week. And inshallah, by the beginning of next year, I'm going to resume the live trading with Alpha, because you're going to learn a lot from it. You're going to see how I manage emotions, how how I manage emotions, how I manage my trades, and pretty much everything in between. So thank you very much for staying up until this moment. I hope you've learned a lot from this video. See you